that's why I think it's better if you have money to invest, it's better to invest the money in Bitcoin, not in. And the entire future of Bitcoin is, for better or for worse, it's linked with the crypto industry. So the sooner that rationality or rationale and order comes to the crypto economy and the crypto industry, then the better it's going to be for Bitcoin, and the sooner that Bitcoin will emerge as a mature institutional treasury reserve asset. So, I mean, the essential thing that you want to do after you acquire Bitcoin is to store it in a safe place. Now, that safe place isn't always a hardware wallet. It might be an organization like Fidelity that's a custodian that you trust, or some cold storage, or some institutional grade custodian, or a multi-sig arrangement with a company that you vetted and you trust. But leaving Bitcoin on an exchange has always been risky since Mt. Gox, so we all learned that. And I think that borrowing or generating yield from a unregistered or unlicensed bank or an immature bank is a risky thing to do. And so, for example, MicroStrategy, we took a loan from Silvergate, but Silvergate was an FDIC insured bank. And when we did that, the terms of the loan were such that we didn't transfer our Bitcoin to Silvergate Bank. We actually put it in custody, and we maintained custody of it. I think that right now, the biggest vulnerability to Bitcoin is the rest of the crypto industry. I think the 20,000 tokens that are unregistered securities, I think the crypto exchanges, the wildcat crypto banks, all the crypto projects, all of the people trading those cryptos, all the crypto hedge funds, and then all of the negative publicity and then the negative financial outcomes that come about from things like Terra, Luna, right? The meltdown of a stable coin that was not stable, that was traded as a commodity that was really a security, that because they never declared it a security, they never actually made any fair disclosures on it. So you had an under-collateralized asset, $50 billion worth of something, trading with $1 billion or $2 billion of equity, right? With a lot of DeFi exchanges and other crypto exchanges allowing those tokens to trade and marketing them with leverage. And I think that got cross-collateralized into Bitcoin. And so the volatility of Bitcoin on the upside and the downside, and then the negative publicity and the fear that a conventional investor, an institutional investor would have to buy Bitcoin is in large part due to the Wild West and the wildcatters in the crypto ecosystem. And the sooner that we clear out that leverage, and the sooner that the world starts to distinguish between crypto tokens that are securities and then Bitcoin, which is a commodity, then the sooner the industry grows up and the asset class grows up. The elegance of the Bitcoin protocol is that Bitcoin mining is an open, permissionless industry that anybody can join. And every 2 weeks, the difficulty of mining increases or decreases based upon the market dynamic. So I think of Bitcoin miners as the line of first defense for Bitcoin. when things go badly, either when poor decisions are made, or when acts of God take place, or acts of government or nation states, the miners suffer so that the Bitcoin holders don't. So, do I worry about miners? Sure. If you're a miner in Iran running on free energy, when the government cracks down on the free energy supplement, you'll suffer. If you're a miner in China running on free or cheap electricity, when the government starts to notice that, you'll suffer. That's why I think it's better, if you have money to invest, it's better to invest the money in Bitcoin, not in a Bitcoin mining rig. I think Bitcoin mining is a business, and there are counterparty risk. We've seen, for example, if you had mining rigs in Russia, when the Russian sanctions took place, you lost your mining rigs. Okay, so if you're in business, you can have your business interest damaged by war, famine, tariff, tax, competition, entropy, poor execution. And that's why mining Bitcoin is not the same as holding Bitcoin. I don't pick any particular price target on the downside or the upside, because I don't want to disappoint myself or anybody else. I do focus upon the 4-year moving average, and I think the 4-year moving average reflects kind of the basis that most Bitcoin holders have in their Bitcoin. So I tend to think that as it gets close to the 4-year moving average, it gets a pretty strong base of support. But in the near term, given the fact that there's just so much leverage in the rest of the crypto ecosystem, and there are large hedge funds and large traders that have a much shorter term time horizon, they're going to control the price in the near term. I think all you can do is just look out 4 years or longer, and maintain your strategy, and in the difficult times, just avoid getting liquidated, right? Make sure that you're not in a leverage situation where you get forced liquidated during the difficult times. And then in the good times, hodl, because you'll generally, everybody is not very good at predicting the future. And so if you're trying to predict the future, as a mere mortal, the marketplace will probably make a fool of you.